Hey everyone, let's talk about unlocking a hidden feature of your stock portfolio, a way to make your long-term investments work even harder for you.
So I want you to think about your holdings for a second. You know, those shares you bought for the long haul, the ones you plan on keeping for years and years. Right now, what are they doing? Are they just sitting there in your demat account, kind of waiting for the price to go up? What if I told you they could be earning you money every single month as a little side hustle?
Well, guess what? They absolutely can. We're going to dive into exactly how you can turn those idle assets into a steady, reliable source of passive income. And the best part? You don't have to sell a single share. Okay, so let's get right into it. The system we're talking about is called the Stock Lending and Borrowing Mechanism, or SLBM for short. And honestly, the easiest way to wrap your head around it is to think of it like this. You're basically collecting rent for your shares.
So, what's the official definition? Well, SLBM is a totally regulated system where you, the investor, can lend out your shares to traders for a little while. In return for that, they pay you a lending fee. And here's the most important part. You always remain the owner of those shares. That never changes.
Seriously, it's just like renting out a spare room in your house. Your shares, that's the room. The stock exchange, that's the platform that finds you a tenant, or in this case, a borrower. And you just sit back and collect the rent, or the fee. And you know, it's a genuine win-win situation. Lenders, like you, get to earn extra cash on assets that would otherwise just be sitting there doing nothing. And the borrowers, who are usually short sellers or arbitrage traders, they get temporary access to the shares they need for their trading strategies. It's a system that's really designed to benefit everyone involved. Now, I know what you might be thinking. This sounds kind of complicated, but I promise you, the reality, especially from your side as the lender, is that the whole process is incredibly simple. It really just boils down to 3 super easy steps. Okay, so step 1, you place an order through your broker. You just pick which of your eligible stocks you want to lend, how many, and for how long. Step 2, the exchange's automated system completely takes over. It does all the work, matching your offer with a borrower. And step 3, you earn your fees, and when the contract is up, your shares pop right back into your demat account. The whole thing is completely hands-off and automatic. All right, so you get the basic idea, but I'm sure you've got some questions bubbling up. Totally normal. So let's get into the nitty-gritty and tackle the most common concerns that investors usually have about this. First up, the big one. The question everyone asks, how much can I actually earn? Like, for real, how much money are we talking about here? Okay, let's use a real-world example to make this concrete. Let's say the lending fee for a popular stock is about, 5 rupees per share for a 1-month contract. If you lend out just 20 of those shares, you'd earn an extra 100 rupees for that month. Now, I know that might not sound like a life-changing amount of money, but hold on. Remember, these fees change all the time based on how much demand there is for a stock. Some stocks can have way higher fees. The real power here comes when you start doing this across your whole portfolio. That's when all those small, consistent little earnings really start to add up. Okay, let's move on to what is arguably the most important question of all. Is it safe? I mean, what's the guarantee that I'll even get my stocks back? What happens if the borrower just doesn't return them? This is where the system is absolutely rock solid. The whole thing is regulated by SEBI and managed by the NSE's Clearing Corporation, which means there are multiple layers of safety built right in. For starters, every single borrower has to provide collateral that's actually worth more than the shares they're borrowing. So what does that mean for you? It means there is zero counterparty risk. The return of your shares is flat out guaranteed. All right, so we've established the shares themselves are safe. That's a huge relief. But what about all the other perks of being an owner? You know, as a long-term holder, I'm thinking about my dividends, or what happens if there's a bonus issue? Good news. You don't miss out on a single thing. If a dividend gets declared while your shares are lent out, the borrower is required to pay you an amount equal to that dividend. Simple. And for things like bonus shares or stock splits, the exchange automatically adjusts the contract. Bottom line, you are guaranteed to get back everything you're entitled to. You lose absolutely none of your ownership benefits. So this is all sounding pretty great, right? So the next question is obvious. Can I just go ahead and lend out every single stock in my portfolio? Well, not quite. Only specific stocks that are approved by the National Stock Exchange are eligible. We're talking about a list of maybe 300 to 400 securities.
As a general rule, these are going to be the most well-known, high-liquidity stocks. So think about your Nifty 50 companies and stocks that are in the F&O segment. The good news is your broker's platform will make it super clear which of your stocks are actually eligible to be lent out. So we've covered the what, the how, and the why of SLBM. And that brings us to the big final question. Is stock lending a strategy that's actually right for you and your investment style? Let's break it down, pros and cons. The pros? They're pretty powerful. You've got a safe, regulated, and totally automatic way to earn passive income while still owning your assets. What about the cons? Well, they're more on the practical side of things. Not all of your stocks will be eligible, your shares are locked in for the lending period, and those fees can go up and down. It's a pretty clear trade-off you have to consider. You know, there's a quote from our source material that I think just nails it. For the right kind of investor, this is kind of a no-brainer. And it goes like this. If you're a long-term holder, SLBM is free extra money every month. Simple as that. So, who is that ideal person? Who is this for? Well, it's for someone with that classic buy and hold mindset, especially if you're holding solid blue chip stocks. Basically, if you're an investor who almost never sells your core holdings, yeah, this was pretty much designed with you in mind. And that really brings us to our final thought for today. Look, your portfolio is already working hard for you, right? Through market ups and downs, through company growth. But the question that SLBM brings up is this. Is it working its smartest? Maybe, just maybe, there's a secret side hustle sitting in your portfolio, just waiting for you to activate it.